Hey, what's up, everybody? Saturday, Memorial Day weekend. Having a little Vinsky. Folks, it is like 48 degrees here in New York City. We got gale force winds. It is pouring, raining. So I'm really mad. I'm really mad. We only get 3 long weekends in the summer. Memorial Day is the kind of, semi-official kickoff to the summer. I usually head out to the beach. They got the Jones Beach Air Show. That was canceled this year. We didn't have it last year because of the pandemic. And even if they had it this year, the weather is so shitty. And then we got, 4th of July, and then it's Labor Day, and then the summer's over, man. I like my Memorial Day. Anyway, I'm still going to do a barbecue, even though it's raining and it's cold. So you can't change the weather, you just got to accept it, right? All right, folks. I'm curious, and I have some thoughts on this, because in June, starting June 12th, a number of states are going to be ending the enhanced unemployment benefits. I've been talking about this. I think Iowa, Florida, Alabama, Alaska, I don't know, a few states on June 12th, but then it kind of rolls out over the course of June and July, where states are going to be ending the enhanced unemployment, it's the extra $300 a week. And there's a lot of debate about this. Okay, people saying, this is necessary because you're paying people to sit on the couch and, people are not coming to work. And that might be true, I don't know. But, I've said in the past that if $300 is enough to keep you from going to your job, that's a pretty bad indictment on your job and the wages that you're earning. But, okay, that's a whole separate discussion. I'm not going to get into that. What I'm going to say is that those who are expecting a, let's say, rapid recovery in economic activity in the states that cancel the unemployment benefits, right? In those states that are ending those benefits, if the expectation is that, hey, those states are really going to leap ahead of the states that are paying people, to sit at home, quote unquote, I'm a little bit skeptical about that. This is actually a very interesting little real experiment that we're having, because I contend that it's about income and it's about buying power. Businesses exist because people have money to spend on the products and services produced by businesses. If you don't have that income, then 2 things happen. Number 1, you have a generally lower level of economic activity. And number 2, you have a higher concentration of wealth because you tend to get things financialized. What does that mean? It means that in order to extract profits, when you're not actually selling more product or services, they figure out a way to financialize things, so you're extracting money from existing assets, you're really not producing anymore. This is a problem, and this is something that's been going on for over 40 years here in our country. So, personally, I'm kind of curious to see how this plays out. And, if I were going to bet on this, I would bet that those states that are canceling these benefits, they're not going to see the growth rates that they think they're going to see, or that a lot of people think will result from, quote unquote, getting people back to work. So we're going to see that. Now, separately, I'm concerned also just about this idea of ending these benefits, because, I still think the economy needs this fiscal support. And that is the core of my analysis. I look at the flows, and if the flows are curtailed, or they start to slow down, or if they're taken away completely, that could upset the scenario. I've been bullish now correctly for a long time because I'm looking at those flows, and I always talk to you about the swimming pool analogy where the pool is filling up with water, and that is the financial balances of the non-government because the government is pumping in that water. But if you take it away, and again, this is not the federal government doing this, these are these individual states. They're opting out of the program. They're saying, no thanks, we don't want the money, we don't want our people, our residents of our states to have this because we want them to go back to work. I get the idea of wanting them to go back to work. But at the same time, I'm saying that the whole argument, again, is like a fallacy of composition. It's like this idea that we all got to save. My savings equates to somebody else's loss of income and savings. All right? So it's like, I understand that one business could have a problem if people don't go back to work for that business. But in the aggregate, if everybody is earning more money through higher wages, then each and every business is going to profit or prosper that much more. Their cost may be higher in terms of the wage they pay to their workers, but if the workers have more buying power, that buying power is disseminated through the economy and results in higher sales of goods and services, and that equates to higher profits. So I'm curious to see how this works out. The good news is I get to see this information every single day. Not because I'm privileged or not because I have some, secret connection somewhere. The data comes out on spending every single day in the daily Treasury statement, and I track this. Again, this is the core of my analysis. These fiscal flows are the core of my analysis because this drives everything. It drives everything. So, if you're not paying attention to this stuff, then you really, the stuff you're looking at, which is the mainstream economic data and mainstream economic media that reports on this stuff, the financial media, some of these quack, kooky blogs. How many times have I made videos talking about headline trading and people who react to headlines emotionally, reflexively, not knowing what they're doing? They're literally handing you their money. The secret to this is, number one, understand what's going on, have good information, understand what's going on, and control your emotions. And then, as a corollary to that, take advantage of people who cannot control their emotions, who react emotionally, reflexively. And there's a whole universe of people out there who do that. A lot of people who do that. We know. I don't have to, I don't have to embellish that point whatsoever. So I'm curious to see what's going on. And it's coming up soon. Tuesday is June 1st. June 12th, these things start. We're going to see the numbers every single day. And I'll be the first one to tell you, if I see a rapid decline in these flows, then, everyone here who's been, dying for a big correction in the stock market, a crash, everyone who's been arguing for a crash, a lot of these, they're printing money guys who've been talking about a crash. Oh, we'll get a market pullback. It won't because of actually, the irony is it won't because of the printing money. It'll be because of unprinting money. So we'll see. Anyway, enjoy your Memorial Day weekend. I'm going to try to enjoy mine in spite of what Mother Nature threw us here in New York. Terrible. Getting punished for I don't know what reason. But have a good one, everybody. I'm on to my barbecue right now. Bye-bye.